When we look at the, particularly in Eurozone, we're talking about the PIGS group.
Yeah.
And depending on what is the country flavor of the week or of the month, Italy is always mentioned in there, but no one really goes too much further into it than it's one of the five that's of concern. Can you just give a little bit more insight on Italy?
I think the problems of Italy are very different to Spain because Italy didn't have a asset market bubble. It didn't have the property sector bubble that burst as in Spain. So you didn't have those imbalances that are now devastating the capital ratios of Spanish banks. You don't have a similar situation playing out in Italy. So that's an important positive comparing Italy and Spain. The problem in Italy is their debt to GDP ratio is very high, 120% of GDP. And the big threat in the case of Italy is that their fiscal reform roadmap doesn't happen fast enough to catch up with rising bond yields. So it's the cost of financing that debt that's the big risk, because obviously we're again in a period when bond yields are rising for Spain, and therefore also people are fearing that Italy could face problems too. The cost of them raising capital on global capital markets is rising, and it's the cost of that fiscal sustainability of servicing the debt that becomes the problem. Had yields been 2 to 3%, then they can very comfortably carry on for a long time with these kind of debt levels, and given their significant efforts to reform their fiscal position, it would have probably worked relatively comfortably over time to at least bring it gradually down. But right now, when you've got yields back over 6% and so on, and risk of escalating further, the problem is that their access to capital markets is becoming harder. The ability to fund that is also becoming harder, because if you're raising at those kind of costs, it's not fiscally sustainable. So the danger for Italy is really about that, is the cost of capital markets, of servicing such huge debt. And so I think, although they are trying to do the right reforms, it's going to take some years for those to work. And in the meantime, they need to somehow service that debt. And I think the fiscal costs are a real challenge now. And that's why we need some kind of response from the EU or ECB to intervene to buy the debt until they make that transition as part of the stabilization measures, I would say.